Hey guys, how's it going? Hope everything is going well. All right, I want to do this quick video on the stock market mini crash, Amazon, and what I think is going to happen moving ahead. Earlier this year, I was talking about S&P uh, getting to around 3,000. After I've seen the behavior in the stock market, um, it probably looks like the top was already reached at 29.40. Even though we're seeing a sell-off right now in the market, and I expect a little more volatility heading into the election, even with the craziness that we saw with the horrible shooting yesterday at the synagogue and the bomb threats that went out last week, right? Even though they weren't real bombs, by the way. I think this craziness is going to continue in the marketplace, probably for maybe another week with crazy volatility. And assuming that the Republicans don't lose the Senate, I think that would probably be the next catalyst for the market to go higher. And in addition to that, it would mean, in my opinion, you have the Santa Claus rally. Now, a lot of technicians are talking about S&P 500 going to around 2880 to around 2990 or 2900. So that's the range that we're looking at, and I'm probably going to be getting rid of my long positions and then putting on a bunch of put positions. I did have some put positions here and there, but I got rid of them during this mini market crash, and I still held some long positions, option positions, which it was difficult managing through it, but we should get through this, or I should get through this in the coming weeks and months and just getting out of them. Because 2019, in my opinion, is going to be chaotic. What we saw last week, uh, event wise, is going to have the same type of effect on the stock market. You're going to see chaos. Now, short term, here's what I've been looking at. This individual, Chris Corallan, right? He's over at spiralcalendar.com, and he has an interesting chart here. And he looks at the S&P 500 5-day 80 line, and he's noticed a trend. And he noticed that the 80 line tends to be more right in determining future price action. And he just has a chart from the last, what, 4 or 5 months. And for the most part, you see the 80 line going down, market goes down. Uh, 80 line is going up while market goes down. You see stock market going up. And the same thing's happening. But let's look at it right now. So from October 12th ish to right now, you see the 80 line what is going up, right? And the S&P has been going down. So that should foreshadow a move to the upside in the, in my opinion, coming weeks and even months. Sure, it could change, but this is just something to look at. And another individual that I look at, his name is Troy Bombardia. Um, the S&P 500's 20-day standard deviation has expanded by more than 5 times in the past 3 weeks. He's basically saying that volatility is going up, but volatility is mean reverting, as I've talked about on this channel. And he's had this chart where we have short-term volatility, which we should expect based on what you're seeing in readings with the VXT, the 10-day volatility, the VIX index. It's gone up. But you should see bullish activity in the coming months. And especially with December coming up, it should be the Santa Claus rally, in my opinion. But we shall see. But short term, I see technicians saying we could go to around 25.50. Some people don't want to even touch the market until 2660 or 2600. So this is a really interesting time, and part of the reason is the Federal Reserve is engaging in QT. I want to go back to Chris Corlan. He did have another good graph here, right? The money printing pump is getting out. I mean, we don't have the money printing that we had in 2009, 10, 11. Right now we have QT, quantitative tightening. And as a result, right, decrease in balance sheet results in a lower stock index. This is just for the emerging markets, but you could look at all over the world. You tend to see stock markets go down when you have tightening. And I'm even looking at fundamental analysts like Robert Wenzel, and he's calling for shorting the market. He said that a few weeks ago. So that's something to note. I expect a decent rally to come, but this whole election thing needs to play itself out. Once that happens, markets should begin to rally. In my opinion, that's the best time to go into cash. Just in my opinion, right? I'm not telling you what to do, but I'm just saying this is what I'd probably do. And I expect probably somewhere around a 20 to 30% correction from the high. So maybe S&P 2100-ish, and that's probably going to be a good buying opportunity in the years ahead. All right, guys, let me know what you think. And yeah, Amazon and Facebook and Google finally have gone down, and I think 2019 is going to be the year where you see it hurt a lot of people's portfolio. Let's just say that. I mean, Amazon went sky high since Trump got elected. It just went on a tear, and a lot of people who bought it that time are probably going to get burned. Anyway, guys, thanks for listening. I'll talk to you later. Bye.